Hey everybody, welcome to Cover Call ETF Investing, your number one alternative source for your income investing needs, especially pertaining to Cover Call ETFs. And today we are going to focus on a very popular Cover Call ETF, which is HHIS, the Harvest Diversified High Income Shares ETF. And I thought we would do put a bit of a twist on how we cover this fund, just because I have recently covered it. But I thought it'd be kind of intriguing to actually look at how HHIS, how its yield, its performance, how its AUM, how its distributions actually are doing compared to its underlying Cover Call ETF. So that is what we're going to look at in this video. We're going to use the Cover Call ETF ALLSTAR tracker for that, which for many of you know, that's a Google spreadsheet I came up with just to get all of your analytics in one place. And you can explore that in the description below if you want to pick that up for yourself. Now we're going to start with the proof that HHIS is a popular fund. And here we are on the desktop version of Blossom, the social investing app, which you can link your brokerages to it. And it's just a nice place that just in a read-only format kind of just tracks what you do in your brokerages. You can share it online and just find out what other investors in Canada and the United States are doing in relation to different ETFs and stocks. And just to show that I got skin in the game when it comes to HHIS, I've just recently completed, goodness me, it was probably about a 5-6 week sort of in-depth, what exactly am I going to do with some money that I got from the sale of my home? What kind of strategy am I going to employ? And happy to say that I've completed that. And part of that strategy has been to get into HHIS in a pretty big way, almost $92,000 in, and which makes up about 27.8% of my entire portfolio across my personal RSP, non-registered account TFSA, and the account that HHIS is in, which is my wife's spousal RSP. Let's head down to the community tab here on Blossom, just to show that this is a popular fund. As far as all the ETFs that Blossom tracks or it's part of its database, HHIS is the number 4 most bought ETF. The number 10 most sold, number 1 most visited, number 1 most watched, number 1 most visited, and number 5 most mentioned. That's an important one because you guys are just blowing up my phone with Blossom notifications on HHIS, which is all good stuff. I love reading how everybody is participating in HHIS, and everyone's sort of given food for thought when it comes to their own experience with HHIS. So if you were to just see all the other ETFs, what's the most bought, what is the most sold, you have to go into the app for that, as the desktop version is still being built out. Anyway, the team over at Blossom doing a good job with the desktop version, and it allows me to do video reviews like this, or at least incorporate a part of the Blossom analytics into these videos. So excited to share at least the social aspect of it. Now, this kind of popularity is very reminiscent of how HYLD was doing a couple years ago, right before that whole banking fiasco. It had honestly similar social analytics on Blossom, and it probably held it for a good couple of weeks before it kind of died down. But one of the big factors as to why it ended up coming back down to earth was it cut its distribution from 14 cents down to 12 cents. Since then, it's back up above that original 14-cent mark. There's no doubt a portion of investors that are not necessarily super serious about investing in it. They're kind of just doing it for the trend, just to see how it goes. So the minute a distribution drops or performance sort of lags, right, like the popularity will come down. I think this is still very much going to be a popular fund going forward. It's not going to be, I don't think it will be sort of a lightning in a bottle kind of cover call ETF, and it is by far the most popular cover call ETF out there right now. So with all that being said, let's get into the tracker and review what exactly is going on with HHIS. How does it compare against its single stock cover call ETF? So what exactly is inside of this fund? Well, you got MicroStrategies, you got NVIDIA, you got Tesla, you got Palantir, Coinbase, Eli Lilly. This is kind of on the more boring end of HHIS, which I don't mind at all. Microsoft, Amazon, Broadcom, Meta, Netflix, AMD, Costco, and again, another sort of boring one, and Alphabet. So clearly, if you have any kind of familiarity with these kinds of stocks, these are momentum-driven stocks. They are quite sensitive, so just keep that in mind. With HHIS holding all of these positions, the only one missing here is Apple, as that is like brand new, and I haven't updated the tracker, which I only do once a month. So you'd get a brand new tracker on the first day of every single month if you opt into that 1-year subscription for it. Again, tremendous value in this to get a lot of your research in one spot. You don't have to have like a million tabs open at the top here to jump back between Yahoo Finance and the fund manager websites. It's all here. Okay, so let's start off with the yield. Where is the yield going to rank? Now, actually, kind of surprisingly, it's not. You might think that it would straddle the middle, and I think we're going to see that when it comes to performance. Like, how could you not? HHIS is equal weight. That's what I want to say. Amongst all of its positions. So in this case, its yield ranks in the top half. It ranks number 6. So you might expect to maybe be number 8, maybe number 7, but anyway, it ranks number 6. So it's kind of in that middle band, I would say, regardless. Anyway, I mean, MicroStrategy's right at the top at 50%. I mean, the cool thing here with Harvest is I would be great to be a fly on the wall when it comes to how they try to figure out their strategies. But what I like is that they're not the first group in Canada to come out with single stock cover call ETFs, and same with the US as well. But I would say in their case, it was probably a good thing not to be the first. I think they probably looked around. Right, they looked at what's going on with purpose investments in Canada, looked at things like YieldMax in the US, Defiance in the US. Maybe you can chuck in even Granite shares, maybe, but that's honestly like their yield boost products are kind of, it's I would say on the periphery of all that, much more similar to YieldMax and the Defiance products. Probably looking at those strategies and just trying to figure out how can we make them better. Better doesn't necessarily mean a bigger yield. It just means maybe, okay, people here in Canada, the 25% leverage actually works really well with our investors. That's the kind of maybe feedback that they're getting. Momentum driven. Yeah, sensitive, but have maybe the potential to have that kind of jet fuel to sort of grow on its own in a diversified format. So who knows? But I would say that they've ratcheted down some of the yields. Even though if you're new to this, these look like insane yields to you. Trust me, the YieldMax stuff, go onto their website and you'll see what some crazy yields look like. It makes this batch at the top here look pretty tame. But also too, it's also great exposure for stocks that don't typically pay a dividend. And you get that with even if you opted into some of these single stock ETFs. Okay, let's just move along to the 52-week high discount. Where does HHIS fall in that? And I guess not a surprise. It's right in the middle. We got Netflix trading right at its almost all-time high. Same with Coinbase. So HHIS, you're getting a little bit of a discount, if you want to call it that, off of its 52-week high, but There's some other big ones in there. I mean, I'm not surprised Tesla is at the bottom there with Elon Musk and all the controversy that has surrounded him over the past few months. Okay, so moving on to performance, let's head over to the 3-month total return, and we'll filter it that way. Again, no surprise, right in the middle. The 3-month price performance, if you don't include dividends, is up 4.29%. If you include those distributions over the last 3 months, it's up 10.87%. Total return year to date, and see what's going on here. Palantir dominating at the top of the heap with 90% total return. Its normal price performance up 75%, and then 60% below that is MicroStrategies, Broadcom, Coinbase. Again, those very sensitive momentum-driven stocks, helping the HHIS to stay pretty competitive overall, with almost 5% total return year to date. Price performance down about 3.64%. So it's in this range of close to par. Again, very interesting to see how a fund like this will perform under extreme circumstances, whether we're in a prolonged bull market, whether we're, the market crashes down or corrects, 10%, even if it's down 15%, how does HHIS grow back? Now, because you can kind of think of it like it's a condensed NASDAQ 100 cover call ETF on steroids. There are others that are out there that have as far as the makeup is concerned, maybe you could say kind of similar, but at any rate, HHIS, as far as a diversified fund, concentrated, I personally believe that it does have that potential to be that jet fuel, rocket fuel portion of your portfolio. If you're investing for income to kind of buoy that portfolio to help it kind of move upward and to the right and stay in the green, as I'm sure many of you know, cover calls cap upside, but it also just depends on the makeup and the strategies. Some construction out there, let's face it, it's poor, and you see nothing but red and down to the right. So funds that are at least cautious in their construction and allow more participation with the underlying, and no doubt a little bit of leverage helps. Everything in here has that 25% leverage. HHIS 25% leverage. I mean, that's a pretty standard here in Canada as far as cover call ETFs are concerned. It just helps to offset the drag of capping the upside. Everything here pays out monthly, 40 basis points for that management fee. We don't have any MERs yet, so that would be your leverage cost, your advertising cost, the management cost. But I mean, it really is that leverage cost that is going to be the bulk of the total cost of the fund. Portfolio coverage, it's up to 50%. That doesn't mean that they're going to be writing call options on 50% of the portfolio. I would imagine they would give themselves some room. Typically with Harvest, a lot of their other funds that aren't necessarily in that income share category or suite of funds with the single stock cover call ETFs there, they'll typically do 33%. So when it comes to AUM, let's filter that and see how HHIS is doing. It's not even close. HHIS almost at $500 million. It's been out for 5 months, and you can see the inception date right here, January 16th. 5 months, almost at $500 million. By the end of the year, this thing's over $1 billion. No doubt. It's just too popular, and people are probably way too intrigued by it for this thing not to hit that number. And it would probably be one of the fastest funds to $1 billion in Canada. So, Harvest gotta they got something special in their hands here. And in second place, you got MicroStrategies, Nvidia, Tesla, all the usual suspects. Everybody and their dog, every fund manager that has a suite of single stock ETFs, they are all coming up with funds on MicroStrategies, Nvidia, Tesla, Palantir. So you pretty much get the exact same cast with other fund managers as well, but it's just how exactly are they formulating those strategies. I know YieldMax, they do their portfolio coverage is 100% on the portfolio, so that's why you get those extra outsized yields. And anyway, you can see everything has 25% leverage here. Let's see, just how new is everything? Yeah, okay, you got a whole heap of stuff that just came out a few months ago. A couple of things came out in January of last year, and then you got a couple of things that came out mid last year. So, but the suite has been completed. Harvest just came out with an Apple version. Anyway, let's move over to the yield tracker. And how is HHIS doing over here as far as the yields are concerned? You can see it's right in the middle here. And we see what has it been doing over the last couple months. 26%, 28.79%. It's been going up, but as the market has recovered, that yield is coming down, still at a really attractive 25% yield. I mean, some of you might just want to use this as a complementary piece just to get you maybe over a milestone, maybe to that first $1,000 mark, or who knows, maybe even that $10,000 mark. And, it could certainly be a piece. For me, it's a piece, albeit it's just one position in one account. But for me, it's a powerful complementary piece. Let's just put it that way. Hard to not call it a core piece when it occupies a quarter of my overall $330,000 portfolio, which I'll probably talk about in my next video. Okay, so we're looking at the yields. How has everything else changed? I mean, we got Coinbase. It's been coming down pretty mightily from May to June, with 46 down to 36. Tesla, of course, coming down as well. Palantir has actually been holding on pretty good. I would imagine that with the amount of price performance that Palantir has been seeing, I guess Harvest is just jacking up those distributions. And I don't actually know that for a fact, so we're about to find that out once we go over to the... we can actually look at that in the Canadian tab down here. But anyways, HHIS straddling the middle again. I guess we shouldn't be too surprised by that. And then we get our AUMs over here, which we had already seen. To start the month, HHIS was at $362 million. Here we are. I'm recording this on June 20th. 20 days later, and it's up $80 million. Guys, this is insane kind of growth. It really is. And even with the single stock positions with MicroStrategies and Nvidia, Tesla, Palantir, I mean, we see the same kind of makeup underneath HHIS, and those are all still growing really well. Harvest really has nailed it with how they have constructed this portfolio, this suite of single stock covered call ETFs. So it's more of a kind of a cautionary tale as far as if anybody else wants to try to jump in on this gravy train. You're going to be competing with a pretty powerful entry into it with Harvest. So they've already really monopolized and really taken over this. I mean, Purpose had their own single stocks, but right as soon as Harvest came out with their version, it was a bit of fisticuffs in a way as to like who could basically construct the best portfolio or best suite. And I just think Purpose was a little bit late on maybe changing up their strategies a little bit. Like Harvest came out with some, then Purpose came out with some, then Harvest came out with more, Purpose came out with more. It almost seemed like a little bit of a knee-jerk reaction. I don't even think Harvest really had much to worry about when it came to all of that. I think they got the superior lineup here. And the other thing too with Purpose is, I've always found them to be a niche sort of cover call fund manager. Not that they only do cover call ETFs, they have like a plethora of other stuff in there, but at least in the cover call space, I saw them as very niche because they had single stock cover call ETFs. They had the Bitcoin ETFs, but everybody else has that stuff now. So I think Purpose, this video is not about Purpose, but I don't mean to gang up on those guys, but it's also just to to recognize that the fund managers with the resources and the AUM behind their products, those are the ones driving the products, and this is just a small example of that. Okay, let's go back to the Canadian tab because I'm really curious with Palantir, just to see how its distribution has increased. Oh yeah, so it started its first distribution in March of 2025 at 37, and it's moved up 50%. Wow. And it's basically maintained a similar yield. So okay, this would be a small example, and this would be so encouraging for all of you income investors out there. Why? Because if you are confident that, hey, look, these might be momentum-driven stocks, but you know what? They have that growth potential in them for the long term, and you believe in them, then as long as HHIS can naturally grow, as we said, that 50% still is unbound, it can grow. And if it grows, well, that just means these distributions will likely grow as well. And maybe it'll be, say, let's just for argument's sake, maybe they try their best to target a 25% yield for HHIS, no matter how much it grows. Like it'll, if it goes up, call it 10%, and let's say the yield drops to like 20, maybe they raise the distribution to get it back to 25% if a new person was to buy into it. But for those buying into it currently, just watch your yield on cost. It's going to increase. So what you'll see is a 30% yield. You'll see a 35% yield as long as you're holding it and reinvesting those distributions along the way. So Palantir here is a just small microcosm example of what maybe we can expect with HHIS in the future. I think with a lot of cover call ETFs out there, I'm usually fairly confident that if the market is growing, especially if you're into all the index S&P, NASDAQ type cover call ETFs, market's growing, those distributions, I would say it's never a guarantee, but at least personally, I have the confidence that they will grow. And I've seen it over the past couple of years, especially participating in the 2023, 2024 AI bull run. We saw these funds grow. Well, I should say not their AUMs, but their distributions grow and then maintain them. So that's all good stuff to see there. At any rate, hopefully you enjoyed this comparison video of HHIS versus all of its underlying ETFs. Hopefully there was some food for thought in there. And if you like what you see, hit all the buttons of the like and subscribe variety, and I'll see you all in the next video.